All right, guys, back to work tonight. Hope you had a fantastic day out there. Hope you made some money. But it's about that time of day again. Time to get back to work. We got more money to make on Wednesday. That's right. We're getting ready for Wednesday's trading session. I have, a lot of great trades we're tracking for tomorrow. I'm going to cover all my favorite setups in tonight's video that we get a game plan to make some money on Wednesday. Before we jump in, though, and get this game going tonight, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And if you enjoy the video tonight, as always, hit that like button, give me a shout out, say hi in the comment section below. I always appreciate you guys tuning in and supporting this channel. But enough of the intro, as always. Let's get into Wednesday's favorite trades. Where are the best money making opportunities here as we go into kind of the middle of this holiday shortened week? Well, boy, buyers have to be very excited right now across all three of these markets. The S&P finally got that nice deep pullback we talked about, and now looking for that rotation back up into that trading range. I got to say, though, on both the Nasdaq and the S&P, looking for some reversals, looking for some rotations back into those ranges. But I'll say, though, my favorite trade for tomorrow, I hope we get it. We'll see if we do. We'll talk about tonight. I would love some bear traps. There's one really big reason why the bear traps off those lows might really be some of the best trades possibly of the week. So we're looking long, lots of bear traps on my radar and potentially breakouts on the S&P and the Nasdaq. Over on oil, boy, there were two things that should have happened today on oil that didn't happen. And that really kind of tips us off that, boy, the buyers on oil, they look pretty hungry for possibly 84, 85 bucks a barrel later on tomorrow, Thursday, into Easter weekend. So looking pretty bullish. It looks like buyers want more here. We got a bunch of breakout opportunities here on the oil. And boy, just like I mentioned, the S&P and Nasdaq, I would love some bear traps, right? So lots of bear traps we're looking for tomorrow. A couple breakouts we'll talk about as well. And not to worry, I'm going to make sure you guys have a nice, easy, simple game plan to make some money on these trades tomorrow. Now, speaking of tomorrow, remember, the next couple days are going to be pretty important because we have the day is closed, right? Markets are closed here in the U.S. on Good Friday. And remember, they've got that non-farm payroll number coming on Friday morning, even with the markets being closed. That really puts this sense of scarcity on the next couple days. So Wednesday, Thursday, really going to be important. We plan our trades tonight and trade our plan tomorrow in the trade room. The two big news events, three big news events for tomorrow. We have the ADP employment number at 8:15. We have one of my favorite news reports, the ISM services index. Remember, the Fed has told us time and time again, the jobs market, the red hot jobs market has been a very, very big factor in them raising rates. That has to be something on your radar tomorrow. And of course, we have the weekly inventory report at 10:30 Eastern time. If I had to guess, and obviously just a guess, if I had to guess which one of these news events has the potential to move these markets the most tomorrow, I would always say that 10 o'clock ISM services index. One of my favorite times a day is 10 a.m. Eastern time. So tomorrow morning, 8 o'clock Eastern time in our trade room, and we'll have a front row seat for those news events coming out at 8:15, 10 o'clock, and 10:30. So keep those on your radar. And again, a lot of emphasis on the next couple days here this week for traders to make their money. Now, speaking of making money, back to our charts, because the news is nice, but the money is made on the charts right now. I'm going to cover all my favorite trades on S&P, Nasdaq, and crude tonight. If you like making money, I would definitely make sure you watch all the way through to the end of this video tonight, because every trade I talk about can be applied to your favorite market, and I will tie it all together at the end. So take some notes, take some screenshots. Let's jump right in, though. S&P first. First things first, though, here. This is a tick chart. You can see all the time frames in the upper left-hand corner. I've had a lot of questions about how I decide what tick value. It's all based on volume, right? So as the volume gets lower, I use a lower tick value to give me more information. As the daily volume gets higher, I use a higher tick number to remove a lot of the noise. There's not a lot of science behind this. It's more just whatever looks better on the chart, and we'll talk more about that tomorrow morning in our trade when we go over this every morning at 8 o'clock Eastern Time. This is the 21 EMA, just so you know, 21 exponential moving average. And as always, guys, down in the description of the video here tonight, I'm going to give you guys some updated 60-minute and 4-hour charts. I like to use the higher time frames, the slower time frames, to give us things like directional bias and major turning points I'm using in my analysis tonight. If you want a good companion for this chart, check those links in the description for the 4-hour and the 60-minute time frames down below. So what's the most important factor on the S&P right now, or the SPY? The most important factor is, if you watch last night's video, we kind of talked about, that head fake off the high and then the bear trap off Monday's low. And it just, we're now kind of trying to finish off that bear trap or that fake out breakout off the low that we talked about in last night's video. It looks like this S&P is starting to flesh out some large trading range after that big move that we saw coming up on Friday. The most important thing right now is we had that huge move up on Friday. This is the first really significant pullback that we've seen since that big move higher. And so we have to think, like I said, you have to think buyers are drooling over this kind of dip buy opportunity right now on really both the S&P, not as much on the Nasdaq, and I'll show you why I say that in a moment. So knowing this, my kind of favorite trades on this right now, I would love to get a breakout of this trading range. The range below us is a little bit of concern, but again, when you think about the context of the situation, my two favorite trades are going to be basically reversals, right? Or bull breakouts going higher. Now, boy, I have 3 different setups I'm going to talk about tonight. So 3 different ways to make money if we do get that breakout going higher. And like I mentioned earlier, I really like the idea of a bear trap. I've got 3 different bear traps I'm watching below lows as well. So we have a lot to cover. Remember, it's very difficult to predict exactly what type of entry tactics or entry setups we're going to get. So we'll go over those scenarios. That way you're ready no matter what the market throws at you, right? When you try to predict stuff, you only give yourself 1, maybe 2 options. When you cover all the scenarios, though, or go over the most likely scenarios, you give yourself a lot more tools to work with to make money no matter what these wild markets are doing right now. I love how price goes up. The buyers try once, buyers try twice. That bull trap for that reversal, we go down. Bears try once, bears try twice. There's that bear trap for that reversal. I love how these 2 patterns, what we call these crown reversals, in our trade room. We talked about this briefly last night on the video. Anyways, I thought that was pretty cool there on the chart here tonight. If we go higher, right, as we go higher, let's talk about that first, and then we'll talk about my favorites here for a bear trap off the low. If we go higher here, there really is kind of three main trades I'll be looking for. One is a 2-try trap, right? So as we go higher here, we have to think, bears are probably going to try to come in and sell into the underbelly of this trading range. One of my favorite trades, if we end up kind of running higher here, I call it a 2-try trap. It's pretty simple. It's a strong move. It's a shallow pullback and a higher high in price. So imagine the move going up like this, right? Imagine that strong move. Okay, strong move up. That gives momentum now to the buyers. We see a shallow pullback. The shallow pullback is important because it doesn't allow any of the dip buyers, right? None of the fib buyers, none of the moving average buy. You know what I mean? We're not getting a deep enough pullback to allow buyers to get in at a decent price. And the higher high basically confirms it's not just some V-top, right? Going back down into that range because, ranges act like magnets. So looking for, again, I call these 2-try traps. They're basically nothing more than the same trap setup that you guys are learning in my free trading course, right? So same idea, strong move, shallow pullback is kind of the key on this, and then a higher high confirms the move. You got to think everybody's going to pile on, right, on that on that bear trap or that two-try trap. Where do you think the market wants to go at that point? It'll want to go back up, take up range highs, and it will definitely be looking for a move up into that 63 and, of course, 71 and a quarter if the buyers really get everything that they want. That's one of the trades I'm watching if we do get this kind of rotation back up into that trading range. Another one is one of the most common types of trades is a pop and grind reversal, right? So it pops up and now begins to grind, right? And grind and grind. I'll tell you, the sooner you learn to recognize these types of setups, the better off you'll be. What you want to do is when it starts to grind like this, the grind is the giveaway. You simply draw a trend line off those highs, right? Bring it down off the low. And then like I always, see how I do that? I pin it off the low like that. And then like we always talk about in the free trading course, you want to go out, look left, find some prior swings, and then look for, like a trap, right? Like this one, right? Get underneath that prior, get a trap. Or if we can get lucky here, we'll get underneath the 21 moving average. Hopefully the bears will come in and try to short this thing. It's an overall bull market. You look in the description, you'll see those 60-minute time frames. We're still pretty darn bullish overall. Hopefully bears will come in and try to short that thing. If they get short into the moving average, now we can use their stops as fuel with a failure pattern. And then, of course, the pullback pattern comes next as part of the price action cycle. We talk about this stuff, right, in the free trading course, right? So trap, failure, pullback combo. And again, all these setups you're going to learn in that free class right now, which reminds me, I know that many of you guys and gals are going through that video course right now, learning all these setups, making money with them on your own account. But if you're one of the few folks watching tonight that haven't taken the free trading class yet and learned all these specific entry tactics I'm talking about right now, what I'll do is I'll put a link up here for you in the upper right-hand corner. Grab that link, take that free trading video series, because I'll tell you the strategy you'll learn in that free video course will show you a simple trick to know exactly where the best winning trades will be each day. I'll teach you 4 of my favorite entry patterns to help kickstart you making money on your own. If you're tired of missing the best trades each day or taking too many losses, definitely grab that link that popped up. Take that free course. You're going to love it. And let me know how you do, because I get a lot of great feedback from our current students in that free course right now. So grab that link up there. I'll also put all these links in the description of the video. Now, one thing you want to kind of keep in mind too is the third one. Okay, the third one now. So we talk about the two-try trap, the pop and grind, the third one. You'll notice, and again, there's a range down here, right? Overall, pretty bearish there in the short term. Let's say, for example, though, the bears come in and they hold this high a little bit, right? We pop up. We don't get that blast and pop. We pop up. We pull back now, and now the buyers come in and they hold the pullback and they jump off that moving average, okay? These are pretty common too. Not as common as the pop and grind, as I mentioned a moment ago, but if they hold, now keep in mind, I'm not that keen on that pullback, and the reason why is because we still got that range below us. I'd like to get us at least launched out of that range and get this momentum really going back here for the bulls. So this is probably not the most reliable pullback entry because of that overhead resistance and, of course, the range below us. However, if they can hold that pullback and really jump, now we've got something we can work with here. Now I'm going to go out, find a new trend line off the high. I'm going to pin it down at that low. And again, I'm going to go out now, find some prior swings, right? Use those for key support. Look for traps below prior swings. Look for failures below the moving average. Failure into pullback combination. Now, one thing you want to think about when it comes to these either pop and grind, right? Either the pop and the grind, or in this case, I call these 1, 2, 3 moves, right? 1, 2, 3 breakout, 1, 2, 3 reversal. No matter which one you get, remember the first leg is the measuring leg. Okay, so an easy way to make more money is to know how far this thing could go. What I always do is I use the first leg and I pin that to my third leg. Okay, remember, trends love to go in threes. So 1 leg, 2 leg, 3 leg. The middle leg is oftentimes a bit smaller, a bit larger. It's just easier once you know that first leg is. The first leg, third leg, once we know how deep that pullback is, then we know how to measure that third leg, and that will give you the ability to squeeze out as much profit on that move going higher. So I like that. I like those 3 going higher here on the S&P. There is potential we may go up and get a reversal back down after that breakout. It's a little bit more complicated, though. We'll talk about reversals off the high tomorrow morning in our trade room. Unfortunately, I can't cover everything here in these videos. Now, I do want to I want to talk more about the bear trap, right? Because bear traps will be great. I mean, this would really be probably possibly the best trade of the day for tomorrow, for the buyers at least, because we've had that huge move up, right, over the past couple days here. So let's talk more about the bear traps over on the Nasdaq. The Nasdaq is similar to the S&P in a lot of ways, but there's one very big difference, and you'll notice right away. The big difference right now on the Nasdaq is we actually never took out that low from yesterday, right? We got that fake out breakout. They got that fake out breakout off the high, but they never actually got that breakdown at the low. So that really, that you have to think that would really be probably one of the best trades the Nasdaq here for tomorrow. Same general idea on the Nasdaq right now. Get rid of this channel. The channel is really there just for kind of illustration purposes. We have a range, a triangle range right in the middle, pop up into a trading range. How many times have we talked about this scenario on this video in the last week or so? We saw one of these last night on the S&P. This pattern right here, right? This kind of fake out breakout. What do we call this? A slingshot, a pendulum swing break. These types of rotations are very strong, and they can really lead to some very powerful moves going higher here. The one thing that you got to be kind of aware of on this one is the S&P has quite a bit of space to go before we run back into that range. The Nasdaq, you'll notice, has a little bit less, right? So I would put a little more emphasis on trap setups, okay, as we're going to go higher here on the Nasdaq. So same basic idea, right? As we go up, to try trap, right? So strong pop, shallow pullback, higher high in price, same idea there, right? We pop up, grind, drawing that channel, finding those swings, combining the low of that channel, again, with any of the entry patterns you guys are learning in the free trading course. That's a good one. The one that you kind of want to be kind of careful about is, let's say we do go higher here, we pull back to that moving average and we blast, right? Trying to buy into that big high up there. This is kind of where the Nasdaq has a little bit less space to work with. So my goal is on both the Nasdaq and the S&P is to find my way in before we get back up, right, to retest the high, because we're very high up on the 60-minute right now, so it's very realistic to think we're going to get some bear traps on the way higher. But then this could be a great place for one of those crown reversals, right? Like we mentioned on the S&P, right, where buyers try once, buyers try twice, they get above those highs. Right? This could be a great spot, right, for a crown reversal off the high. It was pretty wild this morning, right? But as we go higher here, right, buyers once, buyers twice. There's, again, a little bit wilder on the Nasdaq. Nasdaq's a pretty wild market compared to the S&P, right? But that same type of reversal pattern off the high. And again, I mentioned this earlier on the Emini, right? We go up. 1, 2, there's that trap, right? So those types of crown reversals off the high can be a very good, kind of a lucrative way to finish off that move. But again, just be careful though as we're going higher. Don't chase it, right? As we're going higher here, I want to be in as low as I can. And the higher we get, right, the higher we go, the more emphasis you want to put on trap setups. And again, you'll learn more about that in the free video course. So now let's get serious about the move going lower, because Monday's low was just begging to get hit, right? And we mentioned that earlier on. The S&P did it, the Nasdaq did not. There are, I would say, 3 ways, right, we can look to buy that bear trap off Monday's low. One is going to be nothing more than a breakdown, trap in those bears, right? Now, remember, we always talk about this, right? You got to ask yourself, how is momentum? And how is location? Okay, these are the clues that will tell you what type of entry pattern you want to be using, right? So if I get down around Monday's low, location is great. What's not so great? Momentum. Momentum is very bearish in that scenario. Now, again, short-term bearish, right? Overall, the 60-minute chart is still a heck of a bull market right now. So that's why we're looking for longs instead of looking for shorts in that breakdown. So if we do go lower here, I have to respect the momentum of the sellers, even though I do want to be a buyer in this area. Rather than trying to pick the bottom on this, what I'll do is I'll wait for those bears to try a couple times, right? Because again, with that momentum being so bearish, I need to get a catalyst to kind of turn this thing around. And the catalyst is always those stops. You know, we talked about this today in the trade room, right? If you want to pick a bottom when you have a market that's moving like this, you really need three things. One, you need a turning point, like a major low, like a prior low of day. Two, you want signs of exhaustion, right? 2-try rule for the bears. And 3, you want to have some sort of catalyst that can help turn this ship around, right? Turn this thing around. And that catalyst, at least my favorite catalyst, is a stop run, right? Get those bears trapped in and run those stops. So as we go lower, we're letting those bears just kind of dig their own grave, right? And then use those stops, right, as fuel. The best possible reversal at the low would be if we take out that low and get a crown reversal, right? And the crown reversal is nothing more than a 2-try failure, right, with a trap on it, right? It's the bears trying once, bears trying twice, and a little trap, right? Nice strong signal candle, closing convincingly above the 21 moving average. That's the crown reversal pattern we keep talking about, right, on the S&P here earlier on. Another variation of that you want to kind of keep in mind, you know, we oftentimes will see these strong shots down, and because they're so strong, all of that momentum for the bears carries it over and we retest that low. Don't let a retest of that low make you think anything differently. In fact, a retest of the low, all that tells me now is any professionals who were gutsy enough to sell that pullback, they're taking their profit, at least the biggest chunk of their profit at that low. So now the only type of traders who are getting in and trying to sell into that double bottom are the perfect types of traders, right? They're the rookies, right? They're not going to have big wide stops. The stops will be tight. They're not going to be scaling into the position. The small accounts won't allow them to defend themselves. So these double bottom reversals are some of my favorite. In fact, they're one of the most reliable types because, again, the bears are already in. They're taking their profit, and we're roping in those rookies. Now, remember, on these double bottoms, you kind of retest of these lows, once those stops get run, we oftentimes see this thing kind of punch. And oftentimes that thing can squeeze. And when it does that, remember, draw that trend line off the highs, bring it down to that low. You know, I always tell my students, you might not be confident to take the reversal, right? You might not be at that level yet in your trading, but you have to have the confidence to grab that first test, right, off this channel. Remember, first test is the best test. It could be a trap. It could be a failure. It could be a pullback combo, whatever we get, right, off of the low of that channel. So this is kind of that second variation of how I want to be looking to trade this thing if we really get that, what would be ideal, that bear trap off the low. Every once in a while, here's a third one. Every once in a while, we'll see a V bottom. So, you know, again, the perfect scenario is I want to get this going. I want to rope in the bears and use their stops, right, for a jackknife back up again. Speaking of jackknife, sometimes they do V bottom it, right? Sometimes there's so many buyers. Now, why would there be so many buyers? Because we had that huge move, right, going higher on Thursday and Friday, and there just hasn't been a very significant pullback yet until now. So the fact that it could possibly trap below Monday's low, right? We might see so many buyers down here that we don't get any signal. The market literally V bottoms, and then what do? You don't chase it. That's one of the hard parts about V bottoms because remember, we are short term very bearish. There could easily be a channel coming down here and you walk right into, right, a bear trap going back down, right? So we wait for the proper setups. So on V bottoms, what I do is I wait and see what happens. A lot of times it'll V bottom and begin to flutter. And that flutters the giveaway. Now, I know these are a bit frustrating because you're like, man, I want to get in down here. I don't want to. No, you're exactly right. Don't get in way up here. Find that new channel off the high. Mark off that low. And as you know, right, repeat after me. Find those swings, grab that first test, whichever entry pattern you can get in off of that low. Again, probably not not the ideal trade, but sometimes it's all you get. You know, I'd love to get that bear trap, the 2-try failure off the low, the crown reversal off the low. But hey, we take whatever the market gives us. What I've learned over the years is we may not get what we want every day, but if we keep on doing the good work every day, it all comes out in the end. At the end of the week, end of the month, right, you'll get a couple of those really juicy trades. Just take what the market gives you every day. That's all you can control, and that's what I want to focus on tomorrow morning in our trade room. So I like those bear traps. And again, all of these setups I'm talking about on the S&P can also be applied, on the NASDAQ, can also be applied to the S&P, the SPY, the QQQs as well. All right, I think we're looking pretty good there on the S&P, the NASDAQ. Pretty straightforward game plan on this. And let's wrap things tonight on the crude oil. We mentioned earlier, I mentioned the introduction on oil tonight, that there were two things that didn't happen today on oil that are kind of tipping us off to the fact that the buyers, they look to be pretty hungry right now. If you watched last night's video, we talked about how we had that strong run higher and how we'd expect what? We'd expect to see a pullback, a retest, and then where? That beautiful crown reversal off that high. You can't see it very well on this time frame. On a faster day trade time frame, you definitely can though. What should have happened? Once those bears got that crown reversal, they should have been running back towards where? Back to these lows over here, right? So when you get these strong runs up like this, right, run up, in most cases, if we reverse off that high like we did today, we should be looking for a move back down to that deepest part of the pullback. You'll notice that didn't even come close, right? Didn't come close. So this failed rotation off the high, very, very bullish clue. You can also see too, speaking of failed rotation, this is the trading range. It's a little bit different than what we had this time last night. What do we always talk about when it comes to ranges? Ranges are balanced markets. So the amount we go above the range really should have been coming about equal below the range, didn't even come close. That's strike number 2, and really look at it, measured pullbacks. One of my favorite ways to pick pullback entries, especially after a really big blast up like this, is to look for, okay, that was the first pullback size. Second one, again, swing and a miss. They're missing here on all of their rotations. So I said 2, really kind of 3 examples here right now of the bears just, again, getting swallowed up here by these buyers. So knowing this, right, knowing this is kind of what I'm seeing right now, and knowing that we have a ton of bullishness on the higher time frames linked up in the description of the video here tonight, we're going to pretty much use the exact same game plan on the oil as we've done on the S&P and the NASDAQ. Definitely looking for breakouts going higher here. Really do not like the idea of shorting that high here. I did last night, right? Last night I liked it because we had already, again, expecting a retest, but now that they failed that rotation back down again, it's just too much of a bullish clue to want to short that high right now. So I've got those 3 breakouts, right? And then of course a bear trap. We still want the bear trap. I mean, the bear trap, hopefully the bears get their act together. Hopefully the buyers will let this thing pull back, because you have to think that everybody wants to get somewhere below this 79. We've got just so much opportunity down here to trap the bears in and back up. So that's another trade I'm watching here for tomorrow. Remember, as we go higher here, right? Strong move, shallow pullback, higher high in price. What do we always say? Traps, baby, right? This is a good setup as we go higher, especially if we can kind of clear those prior highs, use those as key support. That's a great setup going higher here. Remember, pay attention on the fundamentals of this pattern, right? It's a strong pop-up that should separate off the moving average, okay? See how the buyers get kind of stuck around the moving average right there? right? See right there, the buyers, they don't get much separation off the moving average. What you want is you want to pop up and really separate, right? Really separate off that moving average. Get some good daylight in between the price action candles and the moving average. Then that shallow pullback that drives the pullback traders crazy, right? The higher high in price, yeah, easy. That's your 2-try trap going higher. And again, like I said before, it looks like 84-ish is where these buyers could potentially get this run here for tomorrow. Maybe all we get is a pop up and a grind, right? A grind. Those are easy too, right? Pop and grinds, right? Mark those prior swings, get those traps, get those failures below the moving average, get that pullback combination, and don't forget, right? First leg, third leg, right? That'll give you an idea of where to pull the plug on the runner, or maybe it simply pops up, doesn't really rip at first, pulls back, and then rips, right? What do we call these? 1, 2, 3 moves. I'll tell you, you're going to hear a lot more about 1, 2, 3 moves in my trade room. That's for sure. Mark that high, mark that low. I am obviously keeping it simpler at this point in the video, right? But again, looking for any of the entry patterns we've talked about so far off the low of that channel. Also be aware, we oftentimes see these things pop up and go into a trading range. Okay, and this goes for the S&P and Nasdaq as well, right? At any point we see this thing pop up into a trading range, what do? We look left, we find prior swings. We find support levels below the range. We wait for the pullback. We trap in the bears with my failure pattern, my failure setups, and we used our stops as fuel for easy squeezes, right, back up into that trading range, right? So keep an eye out for that range there. This will also apply tomorrow morning on the S&P and the Nasdaq. One of the easiest ways to make money is a directional trading range, buying bear traps or seller failures below that trading range. If we do get lucky tomorrow, and I say lucky because I think everybody wants this pullback right now. If we do open up and rifle lower here, remember, very, very bullish overall, but bearish in the short term. This is that 1, 2, right? Basically a 2-try failure. Remember that pull up, that double bottom, 1, 2, 2-try failure. Remember to look for those channels on the way higher. From there, we just talked about this on the Nasdaq, right? Trapping the rookies in, grabbing that first test, and you know at that point, looking for that retest of those highs. It may V-bottom. V-bottoms are tough because you don't want to chase it, right? So it starts to grind, going higher. Bingo, there's your new channel right there. We can go out and find those bear traps off of that low. All right. So remember, be very aware of your surroundings right now on oil. Right. We may see some very sharp pullbacks at some point here today to kind of bridge a little bit of that gap that we saw over the weekend. Do not let that sharp pullback fool you. It's not different this time. I don't care what the news media tries to say out there. Right. Trade the chart. Trade what you see, not what you think. And if you need help on this at all, right, you know where to reach me tomorrow morning, 8 o'clock Eastern time in our trade room. All right, game plan is all set to go. I'm getting excited just thinking about tomorrow morning. Speaking of tomorrow morning, 8 o'clock Eastern time, we're getting together in our trade room. You better be there. Advanced members join me every morning in the morning trade room, and we can learn and trade together, all the stuff we talk about here tonight. If you want any more information about membership or the free trading courses or all the extra charts I have linked up, grab those links in the description here below us. If you have any questions here tonight, don't be afraid to shoot me an email or call the office. We're always here to help out if you need help along the way, and we always have live chat running in the background. So if you have any questions here, use that live chat software as well. All right, guys, hope you learned a bunch here tonight. Hope you use this knowledge to make a bunch tomorrow. Hopefully I'll see you tomorrow morning at the opening bell in the trade room. If not, we're going to come back tomorrow night. Tomorrow night is the final newsletter of the week because, of course, Friday is a holiday. All the markets are closed on Friday. So we'll talk more tomorrow night. Very important video coming tomorrow night. In the meantime, get some rest. Be well. Be nice to each other. How about those UConn Huskies, right? Winning the national championship last night. Good for them. Anyways, I'm out of here, guys. Be well. Be nice to each other. And be here next time. Adios, amigos. Bye for now.